Hey everybody, Josh Sigurdson, a World Alternative Media here, and we are joined once again by the one and only Lior Gantz of Wealth Research Group, someone with extensive knowledge of the markets and the monetary system. So thank you for joining us again.
Hey, thanks for having me, man.
All right, so recently we've noticed that with JP Morgan going in the red year to date on their share value, we're starting to see an uneasy trend among the major fraudsters, banksters, that since 2008 they've been falling more and more all the time, now resulting in basically every major bank being in the red year to date. Deutsche Bank just laid off 10,000 employees and are looking at merging with Commerce Bank. They were downgraded by the S&P. All while we see Wells Fargo fall downward and huge disruptions coming from places like Italy. So are we seeing something significant here? What do you think?
Okay, so after the financial crisis, most of the banks had the Fed's funds rate, which is their overnight lending rate, at zero. So you can imagine that from 2009, mostly up until 2015, they could borrow money overnight for zero interest rate, and then they can make an arbitrage buying short-term bonds, U.S. bonds, even at 0.25%, 0.5%, doesn't matter, quarter of a percent, but everything is arbitrage. You borrow at zero, you make 0.25% or 0.5% or 1%, and it's riskless gains. So the banks have enjoyed great profitability, excess reserves in their accounts for years now, and they lended money to only prime lenders, to only prime borrowers for a long time. So they've enjoyed good years in the last 4 or 5 years. They simply had a way to make money that is uninterrupted by everyone else. Imagine you and me doing the same thing, going to the Fed, getting money at zero cost, and then investing it in bonds that are for sure giving you a yield better than the inflation. So what they had was something that individuals or other institutions do not have, that access to the Federal Reserve money, and so that is being lost right now. The Federal Reserve is not only selling bonds but shrinking its balance sheet by not buying any more bonds. So they're seeing their business model change. They need to go back to the retail model. They need to start lending money to either institutions or to the private sector. But everyone's cashed up. Pension funds are cashed up. Most of the companies are showing their highest cash treasury in years. So if you go one by one through the S&P 500 companies, most of them are as cashed up as they've ever been. And so the need for dollars is not coming from U.S. companies. The need for dollars is coming from emerging markets, but JP Morgan and the likes are not the sort of banks that lend to Brazilian companies or Argentinian companies, etc. So their business model is kind of affected badly. Wells Fargo had their own incidents, with, what everyone knows. So banks are experiencing some sort of a transition period where the profitability will be lower. We'll have to see what happens in the next few quarters. I have not invested in any bank following after the 2008 Great Recession, so I'm not an expert on their financial positions right now. So
well, what do you think about at this moment? You mentioned that a lot of them are cashed up. Well, looking at a lot of places, like especially credit unions, we're looking at, in some cases, 0.15% or even less deposits covered in cash. The cash to deposit ratio is alarming when you look at a lot of these balance sheets. And of course, I can understand say 20% covered. A lot of these they're investment banks, right? But when it's as little as like 0.15%, is that concerning?
Well, it's concerning, but remember, it's all based on this fractional model that not everyone is going to cash out at the same time. So it's built on trust, built on faith, built on the fact that no one wants a disaster. Just like in 2008, many bankers did not want a disaster. Obviously, no one wants that on his plate during his career, etc. All their statisticians told him that there's never been a nationwide mortgage meltdown. They kept buying into this theory that we've never experienced it, so we will never experience it in the future. And we all saw what happened. So, overall, the banking system is a very unique industry, because if you think of other industries, there are literally, like you told me off the air, hey, this is my business 24/7. This is what I'm doing. But think of a bank. He opens up the doors at 8:39, closes them at 3. There's no other competitive business in the world that is super profitable that can open its stores for 6 hours a day, not to work weekends. So they have this advantage that they're in bed with the government in many ways. You need the licenses. You and I can't just start a bank. It's not that easy.
Mm-hmm.
So what's going on right now with alternative currencies or cryptocurrencies or anything that has to do with de-dollarization and making the world more open to other type of banking systems, that's all affecting them. Obviously, very minuscule right now, but in 10 to 15 years, the banking, as you know it right now, it will cease to exist. It doesn't mean that JP Morgan will cease to exist or Wells Fargo will cease to exist, because these companies have been around for over 100 years. They've been, through world wars, famines, anything, and they managed to survive. They have a very they have the culture and the and everything they need in order to survive this, but they will not look the same. And I'm excited about this because one of the only businesses in the world that has very little competition on the free market is banking. And it needs more competition, because then the cost of money will be lower for people. More people will get positioned, and money will not trickle from the top down. Because right now, credit trickles from the top down. People that are richer have more access to credit. It's easier to get richer as you grow richer. And that is a cycle that is good for the rich and bad for the poor.
Yeah, and it obviously helps that these banks can get bailouts, most of them anyway. We could see the same thing happening with bail-in regimes, which we are seeing pop up in a few countries. Canada has it written into its budget. We saw it in Cyprus. They attempted it in Italy.
You have the FDIC.
Yeah.
Well, they're insured for losses. It's like I said, it's a quasi-government system, because the government is very much involved in this fiat monetary system, and JP Morgan extends credit. It creates credit, and the treasury prints new money or auctions new debt. So, but it's all denominated in dollars within the U.S. So everyone is needing to watch what the other person is doing.
Yeah, we see a lot of fractional reserve lending, zero reserve policies sprouting up all over the place. It's nothing new. We've talked about these issues for quite some time, and how detrimental long term can this kind of lending be, though?
Well, you saw the best example in 2008, where if the Treasury had not intervened, then you'd have a situation where many banks, their shareholders, their depositors, meaning their clients, and everyone involved would have seen what we called these run on the banks. You would have seen bank holidays. You would have seen discontinuation of the stock market. People forget, but in World War I, the stock market was closed for 6 months.
Yep.
I mean, these things happen. In a fractional reserve system, you have leverage built in for good or bad. So for good, all of our major cities, our economies, our developed economies, they're all levered up. I mean, Canada would not be where it is today. The U.S. would not be where it is today. Europe would not be where it is today if not for the fact that there's so much debt and leverage in the system. But that's, you kind of borrow from the future and hope that it works. But on the flip side, the more you do it, you become susceptible for the other side of it, which is that leverage can compound on the downside as well. And that's why a lot of banks and a lot of competitor to banks, so companies that are looking to outmaneuver current banking institutions and become the banking of the future, they're using AI, artificial intelligence, in order to create their statistics. So to make sure that they lending in the future will be more personalized. So right now, if you go to apply for a 30-year mortgage, all borrowers pay roughly the same interest rate. In the future, using artificial intelligence, they have more information about you, how safe your job is, your financial situation, and the machine learning could not only issue you the original loan, so the computer, the thinking computer will not only originate the initial loan for the best interest rate for the bank and for you. So for the bank, because he wants to make money, issuing credit, and for you because it's affordable. But then it can also, throughout time, it can adjust it according to your net worth, according to what the house is worth, etc. So the future is going to be much more efficient using AI, because if you think of a person, like let's say you were a mortgage broker, you wouldn't have a prayer in the world to know exactly what all your clients are doing right now, what their salaries are, their financial situation, are they divorced, are they married? You can't follow track with thousands and thousands of people, but machines can.
Yeah, and with that said, I think decentralization is a really important part of it, where I wanted to ask, how capable do you think blockchain is of disrupting most industries, especially if decentralized, and factoring in artificial intelligence as well?
Huge, John. Look, the bottom line is that many of the things we do today, humans, can be done better by machines. Just think of the lost days because of leave for sickness, vacations and such, that our economy is losing in terms of efficiency. Then think of just, you had a bad day yesterday. How motivated are you to come to work? These things compound. Mistakes like that compound. Emotional decisions rather than logical decisions. In other words, 2008, what escalated it at the last day was the fact that the banks couldn't trust each other and did not do intraday loans to each other. So that froze up all liquidity intraday for banks. That froze the system. But if you have AI, all of their financial situation is, including their derivative situation, is transparent. So all the banks that are insolvent would be treated as such immediately. All the banks that are solvent, like the community banks, who should have made a lot of money in 2008 because they could have bought the insolvent banks because they were more prudent. They didn't make these subprime mortgages. They should have controlled the industry right now. So your local bank, those little banks that are much more run by better people, more manageable, etc., they should have had a field day of mergers and acquisitions, and they didn't because the government helped the big banks. But AI will come in, and the blockchain will come in, make things more transparent, which is what we need in business. There's about $7.8 billion a year, trillion dollars a year, of fraud in the world. People get scammed or frauds or whatever you call fraud. It's a big term.
Well, I've noticed a great example of that is, for example, the newly released EOS, which is completely transparent, and basically it's considered one of the most transparent cryptocurrencies that have ever existed. A lot of application use, of course. They are unveiling something almost daily for the EOS blockchain. But of course, that's an example of, there's radical privacy and then there's radical transparency. I think there's a market for both personally, but with radical transparency, it allows you to self-govern. And I think that's a really important step in this process of innovating on the blockchain.
Sure, it's all about competition right now. So the more products are introduced, the more people will know where they fit in, what they want, which product they want. Therefore, the more versatile our economy is, the more you allow the free market to work itself out, the more you see which products people just do not like, and which products people want, which service they want. As long as you let the economy run with as little intervention as possible from regulators, on top of just making sure that the consumer is safe. That's all we need, basically, from regulators. And the rest of it can self-regulate itself. So obviously, we don't want to see people get scammed every day.
But people also have to be responsible because, I mean, a big thing that I noticed is there's, for example, the ban on ICO advertisements on Facebook and Twitter. Personally, I can understand why the company doesn't want to promote it, but overall, I think people should learn to, I don't know, be a little bit more intelligent, have a little bit more foresight when it comes to these things, and not be stupid enough to get involved in many obvious scams. And let's face it, the majority of ICOs are, if not scams, not great, not a good idea. But of course, there are some good ones involved in there. And the blanket bans kind of just say, well, we will take care of you, we will be responsible for you, instead of individuals learning how to be, responsible for themselves and not making stupid decisions.
I couldn't agree more.
So, I mean, when it comes down to it, I think the free market has a lot of advantage in self-governance and individuals being responsible, individuals having demand for a product. And if someone screws someone over with that said product, the rest of the market goes, wow, those guys suck. We aren't going to get involved in those guys. And then their demand goes way down. At least that is in the best possible circumstances. But I wanted to ask you actually, what you see as the number one risk for investors in today's market, and perhaps the number one good bit of news that you could tell our viewers.
In terms of risk, the biggest risk right now is the fact that when the Federal Reserve tightens financial policy, when it raises rates and shrinks its balance sheet, at some particular point, the Fed funds rate, which is this overnight lending rate for the banks, it catches up to the 10-year treasury. And over time, over history, if you look at the last 48 years, every time that the Fed's fund rate has catched up with the 10-year bond, then the economy slows down a lot. There's a recession, there are layoffs, stock market valuations go down about 20-25%. There's other unintended consequences to emerging markets. And so we're about 5 or 6 rate hikes away from this happening. So just make sure that you monitor this. And that's one of the key themes that we monitor at the Wealth Research newsletter. Because when this happens, a recession follows almost 100% certainty. So it up until now, with 100% certainty, there's been a recession every time that happened. So I'm saying almost because we're ahead of one more time that this will happen, which we shall have to see what happens. But up until now, that is what happened. We had a sell-off at the stock market, and we had some layoffs in the U.S. economy, and worldwide. There's been countries everywhere in the world that weren't prepared for this, that have suffered massive devaluations because they're smaller currencies and less stable countries. So that's the big thing, because that affects the bond market and the stock market, which are about $30 trillion worth of wealth, much bigger than anything else. And they affect our retirees, which are about a quarter of the nation in America right now. So you don't want these people pulling out money from the stock market or liquidating the real estate, because if they start doing this at a faster rate than they do this, then millennials cannot buy the amount of assets that the boomers have. They're not as wealthy at all. So,
isn't it incredible how much power the baby boomers have over the markets? And considering this block of people are not going to be around forever, and a lot of them are actually getting into debt. We're seeing a lot of millennials depending on their baby boomer parents for universities, etc. How is this all going to accumulate over the next 20 years?
Well, there's 2 major theories here. One is called the demographic cliff, which means that 80 million baby boomers, when they start to pull their money out of the stock market, which historically they have not done. So they're very loyal to the stock market because it's been very favorable to them in the 80s and 90s. So they're keeping their money in, which is why the stock market is at all-time highs, coupled with the fact that the Federal Reserve has been there to tap it up for 10 years, and other central banks. But the boomers, very in high contrast to millennials, they are all in on the stock market. There are about 150 million individual investors in the U.S., so half the country owns stock. And from that, about 80 to 90% of boomers have stock holdings. So it's a hugely invested generation. We can go into why that is and historically talk about many of the generations, but what listeners need to really understand is that what's going on right now in America demographically is very favorable for the United States, and I think the decade between 2030 and 2030, the next decade, is going to be probably the best decade the U.S. has enjoyed or will enjoy in the coming century. So this will be the last major American empire type decade in terms of stock market results, real estate boom, etc. And I'll tell you why. And it's very contrarian. Obviously, many people are expecting a huge fall, a reset, dollar crisis, etc. There are about 80 million boomers right now. Every 10 seconds, a boomer celebrates his 65th birthday. So while we're doing this interview, many people have just announced to their families that they're retiring. When you retire, you are exiting the workforce. So there's about 100 million people already out of the workforce in America. With 300 million people, 330 million people, 100 million people out, it means that there's about 200 million people in the workforce because obviously there are children, etc. There are currently 6.8 million job openings in the US. The millennials are waiting to come in and scoop up these good jobs with high salaries that 65-year-olds are exiting, but they're not skilled enough. So in the coming years, you're going to see the millennials moving up the ladder, doing their second degree and getting more experience in the workforce and start moving up the ladder. The millennials haven't bought their homes yet. They haven't bought cars yet. As you said, they live with their parents, etc. So there's a vacuum of new openings and great high salary jobs that are waiting for millennials once they become trained enough. The reason that they're not being hired is because companies rather pay retirees to keep them another year, another 2 years in business, even paying them overtime or better salaries because they're not trained to do the jobs that highly trained personnel is. And so you're going to see a migration of wealth going from high salary boomers into newly trained millennials, and this is going to help them buy homes, and real estate is going to move up, etc. The stock market is going to enjoy this, but since it's so highly valued right now in terms of multiples, and with normalized interest rates, you're not going to see the market explode, the stock market. So in the next 10 years, you're going to see more or less a sideways market like we saw between 2000 and 2008, but with a very robust economy. So commodities will obviously do better. Inflation will be a bit higher. And you're going to see other sectors doing very well. One of the sectors that we see doing very well, for example, is cannabis, because of the millennial attraction to it and because of the medicinal attraction of boomers to it.
Yeah, I'm actually going to be getting into cannabis with you shortly. I do want to make a quick comment. It's a very insightful view of the future 10 years in the markets, and of course, contrary to a lot of what we're hearing from a lot of different sides. But of course, it's another prediction that's very interesting to listen to and try and understand. And of course, you mentioned, I was actually quite surprised. I think it was yesterday I opened up an article that talked about how there are more job openings than there are unemployed in the United States at the moment. Now, of course, we do have to factor in the amount of unemployment that's hidden in the labor force participation rate, but I can't imagine that it's in multitudes as high as to actually push that notion of a lot of jobs out of the market or out of out of people's idea of what the future is going to look like. There's definitely a lot of openings, and that's definitely something to be excited about. Definitely something to be concerned about long term overall when you see that build up going over the next 10 years, if it were to happen that way. But I did want to ask you about something because we only have a bit of time left. I wanted to ask about in 2017, Wealth Research Group profiled Ethereum at $12 and Dash at $30. You made incredibly high returns. How does it look going forward, and what do you believe to be the most undervalued asset class in the world?
So with Wealth Research Group, we've been very fortunate, I would say, because when I launched the letter, it was right after the Fed hiked for the first time. It was December of 2015, and early 2016 we launched the letter, and there was a huge short covering in the resource sector. So in 2016, we profiled about 12 resource companies, natural resources, gold, silver, mostly, and all 12 have either doubled or more. One of them went up as much as 450%. And then in 2017, we were fortunate, everyone was fortunate basically, because you just threw a dart at a board and you got a winning position in the cryptocurrency. I was fortunate enough to learn about Ethereum when it was only $12 and profiled it at the letter, and Ripple 27, for example, 27 cents. A month later was $3. Cardano with 5 cents a month, or 2 months later it was already 50 cents. So these are insane gains that occurred. Monero, we covered at $19. It went over $400, $500, right? Mm-hmm. So these are generational gains for someone who comes in from the stock market like me, Josh. And I've been investing since the age of 16. I'm going to be 34 soon. 15% annual return is incredible, is hedge fund quality. So when you see 90 times your money in 1 year, you're selling. And so we kept selling on the way up, kept selling on the way up, kept selling on the way up. And therefore, people were almost out of the market at Q4 2017 because we kept pounding the table and making sure that people do the right thing, which is to take profits when you see something as insanely speculative as the cryptocurrencies were at that time. In other words, the value proposition of cryptocurrencies is amazing. A medium of exchange outside the banking system where you actually own the code. You're not there's the counterparty risk is that the entire network goes belly up, but you can see the community. You can understand the liquidity process. You're not dependent on other people and what they're doing, and so there's a lot of positive to the good cryptocurrencies. But when you see them obviously doing what they did in 2017, that was unbelievable. In 2018, we do not believe that type of mentality or behavior from the market will return. The bid will not go as high as some people are saying, or they're betting they'll cut their balls if it doesn't get to $1 million per coin. I don't see that happening. Mm-hmm. What I see in its infancy, Josh, is artificial intelligence coupled with blockchain technology. So the companies that will be able to commercialize solutions, services, applications using artificial intelligence to leverage up, to capitalize the decentralization of blockchain technology, that is the mother lode, in my opinion. And it's very similar to how when computers started becoming popular, Bill Gates had the idea that every personal computer would need an operating system. So the first people that were into Microsoft, when it got public, when it did the IPO, they were very fortunate because the company went 1,000% up or tenfold within the first 2-3 years. Mm-hmm. Same thing with Google. When they IPO'd, they were already a few years into being a private company. So they already had a proof of concept. People were already using their search engines, and then they IPO'd. And the first people that got involved at the IPO, you didn't have to be a seed investor or a accredited investor. At the IPO, like the general public, Google's gone up an unbelievable amount, outperforming the market by about 150% every year on average, because they were the first to commercialize a search engine, because everyone needed to use this. Now, what everyone will need to use in the future is blockchain technology in their business in some capacity. So if it's healthcare, we all know that giving people a decentralized approach to their data would prevent about 70,000 missed killings a year from nurses that give the wrong prescription to allergic people that are inside of the hospital. They mix up the sheets and all that kind of stuff that shouldn't happen in America. 70,000 people dead from getting the wrong pill.
Yeah, well, I know that personally, being in the Canadian healthcare system and getting misprescribed stuff that nearly killed me in the past. It's something that happens a lot more than people realize.
Exactly. Now imagine supply management. Imagine companies like car companies. They need to know better when your car is going to need an oil change or a trip to the mechanic, or if they want to sell you a new car, they can know how much mileage you've done.
Yeah.
If they have the Internet of Things inside, built in your car, and then they can offer you a better solution to your personalized problem. For example, if you do a lot of commutes and then 3 years into it, you want to change your car, and the company approaches you, not you the company, but you get a text message or an email from the company that you bought the car from or that you leased the car from, and say, hey, we have a great offering right now for you. We can see that your mileage is such and such. You would need an oil change anyways in the future, and then your tires change, etc. So when you use the Internet of Things and artificial intelligence and blockchain technology, and you marry them, that is going to allow maximum efficiency. I always talk about nutrition and the amount of people that can use better nutrition. Think of AI in terms of your nutrition. It can tell you when you need to eat more vegetables or fruit, and which. It can really help you. It's like a personal secretary that knows everything about you and just feeds you with data, not emotional decisions, like your wife saying, hey, I think you spent too much, right? Because that's like an emotional decision.
Yeah.
But if a computer can say, hey, I know you wanted to buy more shares of 1, 2, 3 next month. It looks like if you're going to continue to spend like this, you're only going to have half the allocation that you intended to buy. So you should consider doing such and such.
Yeah, and I think it's really important to mention, of course, we're not talking about government putting chips in you. I know there's going to be a lot of comments. No. We're talking about decentralization.
Sure, and this is going to be all exception. How do you say it in English? Consensual. Mm-hmm. Consensual. Sorry, I grew up in Israel. So it's going to be consensual. This is going to be something that will happen with your consent. Do you want to get involved in this database, etc. These are product offerings that are going to be on the back end. You're not going to know many of them are even happening, but it is what it is. You have to give up. There's a sacrifice with everything, and what I think is most important is to get involved. So not a lot of people listening to this interview are going to quit their careers and look for an AI job. But I think that you can get involved like you saw Google. So every one of us, and I always say this to the people who smoke Marlboro, Philip Morris is the best performing stock of the 20th century. Mm-hmm. Instead of smoking, if you only bought shares, instead of smoking Marlboro, if you only bought shares of Marlboro, every $1,000 became $4 million.
Wow, so, that's a lot better than smoking all your money away, giving mostly to taxes when you buy a pack of Marlboro. That's definitely a better alternative.
Exactly. Now, when you Google stuff, you already know that Google works, right? So when Google IPO'd, it made sense to buy shares of Google. And so what I think is happening right now, and this is why I personally wrote a letter to employees of a company that is going public this week, and I just told them, point blank, you're sitting there at the motherlode, and I'm talking about a company called Global Live Technologies. It's at the time of this interview, like right now, we're doing this on the 10th of June, but on the 13th of June, they're likely to IPO a company called Global Live Technologies. It's going to trade in Canada under the ticker LIVE, L-I-V-E, and then a few days later, obviously, get a U.S. ticker as well. So it's a publicly traded company, not an ICO or anything like that. You need to go to a brokerage, a regular brokerage firm to get involved. But this company is commercializing artificial intelligence using the blockchain.
Yeah, and actually, just to make a point on that, I will be interviewing their chairman tomorrow, so I'm looking forward to that.
Okay.
So I'm definitely looking forward to learning more about Global Live. It's a very interesting business model. So I wanted to, but like because we're running out of time, we only have a few minutes left. I wanted to ask you about something that I know that you have news regarding cannabis legalization in the U.S. So I wanted to ask you, what's a good word on cannabis?
Well, I think two things are happening right now. So in Canada, obviously, July is going to be probably the date that they announce that they're going to fully legalize. Then end of August, early September, they're going to start actually allowing companies to start selling, etc. That is going to help the consumer. A lot more competition comes in, a lot more demand comes in, and you're going to see better prices, more companies fighting for market shares. That's always great. The big thing as an investor would be to see what the U.S. does to react to this. So, the U.S. will not allow Canada to have all of the better jobs, the high salary jobs in there, all the tax revenue. And then when Canada starts exporting cannabis, the U.S. will not allow, or should not allow, I should say, their friends in the North to outcompete them so early in the game. So I think the biggest thing that can happen is if the federal government starts to look at legislation to have this thing finally legalized. Because if this was 1930, right, and you legal and you have cannabis and alcohol, and you tell people, look, let me show you a picture of what would happen if alcohol was legalized, and you see 400,000 people die every year from liver problems, and then you see all this domestic violence, etc. And then you look into the future of cannabis, and you see people are having a better time sleeping, less pain, they're more relaxed, better taxpayers, and you can just look at other countries that have already legalized for years, and they have no issues, like the Netherlands, which I'll be visiting in about 2 months here, to see how to see how their model basically works for them so well. The choice would be, everyone would say, let's legalize cannabis over alcohol. I mean, what's the debate even? Because this is a plant that has thousands and thousands of uses that haven't even been tapped yet, because R&D, or research and development, has not started yet, because so much money is waiting on the sidelines for this to be fully legalized so they can start to explore the plant and all of its uses and all of its benefits. And I'm not even talking about the hemp. Hemp can be used for paper and furniture business and many other businesses that are more industrialized. And then you have the medicinal side and the recreational side. So this is huge. And the fact that legalization happens only once, it makes it a one-time event, which can have big positive ramifications.
Yeah.
And I think one of the things to consider is that cannabis is a commodity, and therefore the best businesses are in the ancillary industries. So, for example, companies that will be able to put on the blockchain, if we go back to the blockchain, software that can help companies protect their IP, their intellectual property, on how they breed their plants, what temperature, the genome. It goes all the way back to the DNA of the plant itself, and control all the supply management up until the sale price, so that people would know when they're at the dispensary where this plant comes from, what's the stages that it's done. This is all going to be very well. So I'm actually right now looking at companies that are building blockchain software for the cannabis industry myself. So this is exciting, very exciting.
It's very interesting to hear these sides of market innovation, and that's one of the great things about blockchain. Just going back to that quickly before we wrap it up, is that when you consider all the fundamental uses for blockchain, it's not just currency. There's a million things you could do with blockchain. You could literally have an alternative to most things, and we are seeing that develop. We'll see it develop much more over the coming years, and it's incredible what you can do with the blockchain. But with that said, people should always look towards that which is most decentralized, just for their own sake. And I would also mention that we have people saying, over the year, by the end of the year, we'll see $15,000 Bitcoin and all that. I don't know. Personally, I think that as of the last year or so, nobody really knows what they're talking about when it comes to price speculation for cryptocurrencies. I think that even the smartest people out there get it wrong constantly, which is a good sign that, hey, just let it ride and, watch the markets on a daily basis and see what's happening and make your own decisions. But personally, I think that it's going to be great long term, and the amount of potential is unbelievable. All the things that you can do with the blockchain is absolutely unbelievable. Let's seize it as a free market and not let the government use it for shady business and all that kind of stuff. We should focus on making the market aware of what the blockchain is, making the market aware of how great decentralization is, and let people flock towards more decentralized blockchain solutions, because there are so many, and we will continue to be covering that moving into the next few weeks. Especially, we got a lot of big interviews here talking with big innovators in the market. And Lior, I wanted to ask you, where can people find more information from you and find the latest info from Wealth Research Group? We always enjoy having you on.
Thanks. Well, first of all, to the listeners who want to make sure that they're prepared and already educated before the IP, I know when the interview will be released, but if you want to check out all the information that the management of the company has vetted and looked through and proof checked with regards to Global Live Technologies, you should go to wealthresearchgroup.com/live, LIVE, and you can download about 188 days worth of research that I did on this company. And then overall, the best way to stay in touch with everything we're doing is the newsletter. That's where we really put our top ranked, highest priority stuff and publish it. On the website, one thing that listeners would, I think, would find most valuable is on the top menu. You can see a button that says Special Reports, and it's basically a wealth library, an aggregated wealth library of all the reports that I ever published. You're talking almost 3 years of Wealth Research Group, and then obviously everything that happened to be before, all the fundamentals, the investing principles that I've learned over 16 years. Over 18 years, since I was 16, investing. And I think that that's the best way to kind of see and check out more. If you're looking for the cryptocurrencies and everything that has to do with that, you should go to wealthresearchgroup.com/rocket, which is where it's kind of a very lengthy manual on everything that has to do with cryptocurrencies. So it's all very exciting. And yeah, Josh, I mean, very exciting times.
Yeah, the future is definitely bright. I'm looking forward to it, and I hope to have you on here again. Everyone should check out the Wealth Research Group. A load of information on countless different topics and markets. It's just really incredible work on Wealth Research Group. So thank you for joining us again, Lior. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Like what you see here, WAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized and censored by YouTube as the ADL comes in and flags all of our content as hate speech. Also, check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also find us at steemit.com at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in Steem, the cryptocurrency. And also find us at the Red Pill Expo, which we have a reference link for below in the description and the comments as well. Hosted by G. Edward Griffin, amazing speakers coming out to speak this year. Don't miss it. It's in Spokane, Washington, June 21st to 23rd. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.